But look at the index composition right now. Other than IT and some of those currency trades in pharma, a reason why DRL and Sun Pharma may be holding out, you're not seeing any material strength. There's the Tata Motors PV, which is up 5.5%, but metals, Reliance, some of the consumption names, banks, they're all languishing in trade as we speak right now. Within the broader end of the market as well, the tilt is towards the decline. So Muthoot, of course, is one such case in point. Look at HAL, that's cracked 5% in trade. Hindustan Zinc is down 5%, Voltas is down, and IOC as well, even after the fuel price hike, that's lower by about 4%, so hasn't seen any material respite come by as we speak right now. But Amrish, just wanted to know whether, looking at the way currency has been, it still makes sense to increase one's pharma exposure?
See, I think the currency would remain, I suppose, in this range unless, of course, your crude cools off and the FIs start returning. And I think that's at least some time away. So from that point of view, yes, I think one can be investing in pharma because that's one of those safer hiding spots, especially in a scenario like this. And again, there I would possibly go with the top line of pharma companies as compared to the small cap or the mid cap ones.
Okay. Rajesh Palve also joining us from Axis Securities. Rajesh, great having you. How are you viewing the move on the market today?
Yeah, good afternoon, Harsh. Good afternoon, everyone. So market is volatile and still not able to take out the major call concentration area of 23, 750, 800 zone, which is very important and crucial for the market. So until the Nifty not able to take out 23,800, I think short covering action is still pending in the market. Though we have recovered from the lower level, 23,300, 400 has attracted major put writing activity. So that has confirmed some base building activity for this correction. But still the resistance are very stiff at this juncture. Major call writing is still attracted at these strike 23,800, 23,700 zone. For Bank Nifty is still struggling to cross major supply zone of 54,500, 400 zone, which is very important and crucial for Bank Nifty. Though Bank Nifty had attempted to move around those levels, but still meet to the supply pressure. A lot of volatility in the global market also. So traders and investors are a little cautious at this juncture, and profit taking is happening in the market at higher level. The sectors where we have seen, some outperformance are also, witnessing some profit taking at higher level. Very few select themes are still holding the ground, like pharma, metal, capital goods, some of the capital market related stocks. So these few pockets are still holding the ground. Even power stocks are also still holding the strength on the near term, short term chart. So very few opportunity at this juncture as markets are volatile. Continuity of buying interest is not there in the market. So I think in these 3-4 pockets, one can find out some opportunity on the long side in these kind of market.
Right. Okay.
Out a couple of power stocks which are buzzing in trade today, including the likes of a TD Power. Stock is perked up 10% or so in trade. Wasn't perked up as much in the morning, if I recall right, but those numbers really having an impact now on the stock price. Numbers obviously came in yesterday, but we didn't see that move in the morning. What do you make of the move, Kunal?
Yeah, I think the stock has moved in the last, I think, 3-4 months from 780, 800 levels to now almost 1300 marks. So the run-up has been very steep. I think at this point, it's a bit of a difficult situation to try and initiate or buy over here for TD Power because the stock now seems to be coming into a deep overbought territory on the charts. Today's volume is one of the higher volumes the stock has shown. However, I think with the price run-up and the market setup, I think it's better to avoid and not initiate a buy over here.
And Balaji Amines, second straight day of very solid gain seen on that counter. Rajesh, what's the view there?
Yeah, so Harsh, stock is moved up very sharply in last couple of trading session, and looking at the overall structure, we believe that stock is now managed to surpass its falling trend line resistance area on the monthly chart also. So there is a sign of trend reversal on the long term chart also. So now if stocks continues to hold above 1650 zone. I think that next upward momentum we could see towards 1700 to 1700 to 1750 kind of level. So I think one can hold the position. Another leg of up move we can see towards the 1750, 1800 kind of zone. So hold the position.
Okay, that is.
Hey, Ambrish, let me come straight to you with regard to some of these jewelry counters. They were in focus on the back of the numbers that have come through. What do you make of the numbers, and how should one read into the commentary now, given the fact that you've got that import duty which is coming in on gold, and of course import duty plus, which takes gold prices up by 9%?
Yeah, and especially after PM Modi's appeal, I think most of them would have to change their business model, at least temporarily in the sense, at least for the next 1 year, that it will be more on the recycled gold than new gold. And the way the duty also has been imposed, it's going to be quite expensive. Already we have seen the gold prices going up, so because of which the volume is also coming down to a certain extent. So overall, if you're asking for the next 2 to 3 quarters, I think most of them will have margin issues. And you just see the PN Guardrail's numbers. Clearly margins have fallen, and I think it can fall a bit more because of all these issues which are there. So for the time being, I think one should stay away from most of these jewelry stocks. Maybe take a fresh view in the next 1 or 2 quarters.
Ambrish, how are you looking at Tata Motors PV's numbers? I mean, the India business did quite okay, while of course it was a neutral set from JLR.
That's true, but again, we should remember that JLR had that issue. In the last couple of months. Hopefully, going ahead, I think that should be settled, and because of which we should start seeing better numbers as far as JLR is concerned. So at these levels, I would still be a bit positive on Tata Motors.
Okay, that's the take coming in on Tata Motors PV, perhaps the one resounding winner in trade today. There's, of course, the IT trade also, which is holding out. DRL, Sun Pharma looking okay. The Adani group of names, let's bring those up for you on your screens and how they are doing right now. Adani Ports, of course, is one which is holding out about almost 1% in trade. But Adani Enterprises has cooled off and given up its gains, and especially given the fact that it was one of the key performers in trade yesterday. Kunal, now what trajectory for these Adani names?
Yeah, I think on the short-term charts, would still be positive for many of the Adani group of names. I think it's just that on the very, very short-term basis, you've seen these stocks moving up by I think around 8% to 10% in the last 3-4 days. For example, Adani Enterprise was almost at 2,450, 500 mark. That stock has jumped about 2,700 levels. So you want some sort of stability coming back into these names, and you don't want to buy these stocks at the extreme, even though the price uptrend looks to be on the stronger footing. So I think for someone who's missed out on the previous leg of this rally for many of the Adani group of names, it's better to wait for a mild bit of correction, say a broad 4%, 5% correction from the swing highs for stocks like Adani Enterprise could be a good advantage. Adani Power, I think, has done very well for itself. That stock has climbed about the 200 to 215, 20 mark quite comfortably in the last many weeks of the price uptrend. So buying the stock on correction, say closer to 205, 210 could be a better price point rather than buying at current juncture.
Okay, so that's with regard to Adani group of stocks, of course. Kunal, in terms of the outlook with regard to some of these chemical names, including the likes of Balaji Amines, what's the take that you have over there?
Yeah, I think it's been a fantastic last 2 days for the stock because from those 1320 levels post the gap up yesterday, the stock has done phenomenally well. But the only concern which happens over here is that we are in that phase of the market where suddenly after a gap of like 2-3 days, when a stock does very well for itself on the back of higher volumes, it doesn't make sense to buy these stocks at the high point, because there's bound to be a point because of the market volatility that these stocks provide you that odd phase of correction. So buying this on dips could be a better advantage rather than buying at the current juncture. I would look at say possibly 1600 mark, 1560 as a good starting point for someone who's missed out earlier.
Rajesh, some defense names, the likes of Solar Industries came out with numbers, also came out with commentary, very strong in terms of the guidance. What's your take there?
So very strong run up in this counter, and looking at the overall structure across all time frame, stock is exhibiting a bullish structure only. The way stock is now approaching towards its all-time high trajectory, I think if it continues to trade above 16,900 mark, I think the next target on the high side we may see towards 17,800 to 18,200 kind of zone. So I think those who are already on the long side of trade can hold the position. In minor decline, one can add also with stop loss of 16,900. On the high side, 17,800 to 18,200 would be the next target for solar industry.
Rationalize this, Ambrish. This one trades at 10 times 1 year forward sales. He trades at 1.5 or 1.6 lakh crore in terms of market cap, is guiding for 14,000 crore in terms of top line, which is a 50% growth versus current year. How do you rationalize this, and what within defense would you play, if at all not this?
No, I missed the name, Harsh.
Solar Industries. Apologies, Ambrish.
Solar Industries has been a leader in that segment of defense products. So I think the performance which the company has been showing, I think that will continue even going ahead. And consistently, if you see the margins, they've been quite high consistently, all in the region of 26-28%. So I expect the growth to continue. And if you're talking of the next, 4 to 5 years, yes, I think we could see much better levels than where it is right now. I'll not be surprised if you continue to see that 15% sort of a CAGR as far as the stock is concerned.
Okay, just a minute and a half left to go before we wind up for the day. Rajesh, as well as Ambrish, we'll let you go on that note. Kunal, thanks to you as well for joining in.